Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about how to swing trade. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel, and if you have any questions, concerns, make sure you guys ask them down in the comments. Also guys, make sure you guys sign up for the giveaway. I'll put all that in the description so you guys can sign up for that. And if you want to learn more about investing, check out my course. Now that we're done with that, what is swing trading? Well, for those of you that don't know what swing trading is pretty much when you buy a stock, you hold it more than a day, but you hold it less than a year. The reason why you don't buy and sell during the same trading day, that is considered a day trade. It's a different type of trading style. It's a different strategy, and it's, in my opinion, a little more risky for beginners. Now, when you buy a stock and hold it for more than a year, that is a different trading style. It's literally investing for the long term. It's a different tax bracket. It's a different investment style. So swing trading, on average, you'll hold a position for about 14 days. But overall, you have to have two things. You have to have a broker, and a broker is just a way to buy and sell stocks. Now, a lot of people love like Robinhood and all of that. You know, I definitely think Robinhood is great for people who are just starting, but most people that want to make something out of this need better charting. So the ones that I would recommend is TD Ameritrade, the Thinkorswim platform, or Moomoo. Both are fantastic. I am on the Moomoo platform, so I'll put a link to that down below so you guys can check that out. But the reason why I love them is because of these customizable charts. You can look at it, you can customize everything, you can have your platform down here to buy and sell. You can have limit orders. You can have your watch list all in one place, which is fantastic. Not to mention they do have other tabs here. So if you wanted to look for stocks, they do have a stock screener. We'll make a separate video on this one. We're going to be covering a different stock screener that is definitely a little more beginner friendly for you guys, but we'll definitely address this in a later video. So going back to the trade tab over here, the next thing after a broker that you'll need is a way to find stock. So for me, I feel like the Moomoo and TD Ameritrade platform, they're pretty decent, but I almost like to have an external trading platform or external scanning platform. I find that it's a little easier to use because I have two monitors, so it's very hard to kind of integrate everything. So what I'll do is I'll have my broker on one, and then I'll have my scanning feature on my other monitor. That's the benefit of having two monitors right there. So on the Finvest, I'm Finvest. Once you guys load it up, you will see all this, okay? And I know it might seem a little overwhelming, out of the get-go, but you can see, this is just the sector breakdown of the S&P 500, and all the green's great because that means the market's going up, okay? Now you can have the three indexes up here, the Dow Jones, NASDAQ, and the S&P 500, so you can see we've had a great day. The Dow Jones is up 2.5%, NASDAQ's up 1.6%, S&P 500 is up about 2.2%. Scrolling down here, you'll have a whole bunch of different stocks. So you'll have the top gainers, the top losers, new highs, new lows, overbought, oversold, unusual volume, most volatile, insider buying, insider selling, all that great stuff. And then you'll have signal trades down here. So me personally, I don't really pay too much attention to this type of, this type of stocks right in here are more of the day traders, right? If we actually pull up one, ISPO, you can see it's going to be one that is going to be more volatile. ISPO, it's going to have, higher price movements where the stock went from $13 all the way up to 109. It's sold off, found some support, now at 30, popped up. This is definitely a way to make money, but for me, this is too high of a risk tolerance, right? Maybe there was a move down in here, obviously, but we all missed it, so it's better to just miss out on that trade. This is more of a day trader trade that you're trying to get in and out of that position very fast, just off those short-term price movements. So for me, I always go to the screener tab. I like to put all of the, the descriptive, the fundamental, and technical all in one place. So I like to click all. As I scroll down, I want to make sure my stocks are under about $30 or $20. The reason why is I want to be able to capitalize on share size. So if you only have $500 or $1,000, this is a way that you guys can, capitalize on share size. So if you have a stock that goes from 12 to 120, you have enough shares to you make some money off it. The next thing is I like to make sure that people are buying it. I want to make sure that I'm not the only one buying this thing. So you want volume. Volume is key to this. So anything over about 500 or 700,000 is going to be very, very good. The next thing I want to do is change the relative volume to pretty much over 0.5. What this is the overall demand for the stock. And as you go up, these get very, very higher risk for sure, because you'll have these huge pops, very similar to like more of the day trader field. The pattern here, this is the most important thing for a screener. This is going to be pretty much the bread and butter. As you see down in here, we still have almost, 1,300 stock on this list. We want to limit that down. So I want to make sure that we are on some sort of support. So I'll go TL support, which pretty much means trendline support. And we can always go to, horizontal S/R, which is another good one. But we'll start here and see kind of how we're looking. So as you can see, that eliminated a lot. And now we still have 78 left. Now, yes, you can continue to go through and look at sectors and, EPS and gaps and all of that. Me personally, I don't mind going through 78 stocks. I find that joyful. I would rather look at all the opportunities out there that have some sort of potential of making me money. So what you pretty much look for is you'll need to look for two things. If you're a long trader, you're looking for a stock that pretty much has that beautiful upward trend, right, that we love, and has some dips down near support. It's a great way for beginners to learn this strategy that we'll see. We'll find one here, something like this, but if we had a little more sell-off back down to about $15 would make that one more interesting here. As we continue to look, the biggest thing, guys, with trading is, okay, if that's just say we don't find one, that is fine. I would rather trade a high quality stock than not trade at all, because preserving your capital, especially starting out, is key with investing. So something like INFY, we can pull that up and see if it brings opportunity. INFY. So this one here, as we go ahead and load this one up, you can see we'll go to the custom chart. We'll go all the way down to, I don't mind going the daily on the yearly. I feel that is very, very fair. So something like this is very interesting because, one, we have a general upward trend. Okay, so you want to make sure that this stock is going up. Okay, as we look at it, we have this 200 moving average line, this purple line following the stock. Now what this does is it acts as a trend indicator. So you can look at it and instantly know the direction of the stock. So the next thing it acts as, when the stock is above it, like it is up in here, it has a tendency to use it as support. So pretty much when the stock hits it, we have tendencies to see buying pressure near and around it. So as you see, it hit it once, hit it twice, hit it 3 times. We did have a little dip below it, but it's pushing its way back up. So for me, this wouldn't be too bad of a trade, if we actually go ahead and we can actually customize this so we can actually see. So given that the stock right now is at $22, pretty much what I would be interested in doing is setting stops below that 200 moving average line, maybe at $21 or $20, right in that range. So you're risking $2 to possibly have this stock push back up to highs here at this previous resistance. So you're virtually risking, $1 or $2 to possibly make $4, which is a pretty decent risk and reward. That's about a 2 to 1. So this would be something I definitely would put on my watch list and look into swing trading. So the biggest thing is you just continually go through this and you throw stocks on your watch list and you find those opportunities. Something like this, great upward trend, major sell-off, found some support. Now we're starting to work its way back up. MPW. This one here, I already have a feeling is going to be a very, very higher risk. But we can pull it up and see what we got going on here. Yeah, so you can see with all those dotted lines, this is pretty much when the stock doesn't get enough traded. So you'll have these lines form. For me, not interested. And if you get too many of those, then I would recommend going ahead and changing your average volume right there. So we're just looking for opportunities. Like I said, something even like SHO might have some sort of potential. SHO, this is a hotel chain. If we go ahead and we go to the yearly, you can see breaking down basic support and resistance. We can go horizontal line, resistance up here at 13. If we go ahead and draw out some support is right here. This would be a no-brainer for me. You hop in at 10, set your stops at 980, 950. You're pretty much risking $1 to possibly have this go up to 13. You're risking $1 to make $3. That's pretty much how you do it, is you're setting your stops below even the lowest wick. The reason why is because if you have sell-off, sometimes what will happen is you'll have a support breakout where the stock just continues to sell off. But for me, this is what you look for. These are key things. So yes, we have that general upward trend consolidation. We understand the resistance. We understand the support. Then you swing trade it. It's not complicated. And the biggest thing about this is right now the stock is $10.65. And given that if you load up on share size, the only thing that's separating you from making $100 a day to $1,000 a day, if that's just say you're only making $10 a day, the thing that's separating you from making $100 a day is share size. So you have to compound your account, meaning all of the profits you get from one trade, use it on another. Start that snowball effect of building up your portfolio, and before you know it, you'll be making some larger trades with higher P&Ls, and you just have to understand the risk tolerance. And if you are completely new to this, I would recommend paper trading. There is absolutely nothing wrong with it. It's a great way for beginners to start understanding the order flow with your swing trading, developing that strategy, building everything up from the ground up, guys. So that is it, guys. I hope you guys enjoyed it. This is a great way for swing traders to start trading stock. So we'll see you later. Remember to stay happy, guys. Stay positive. Stay safe. We'll see you later. Take care.